are joined by the management of Ather Energy, Mr. Tarun Mehta, CEO and ED. Thank you so much, sir, for joining us today. Right off the bat, you are planning to spend over 900 crores on capital expenditure for a new plant, while your existing capacity is apparently underutilized. Can you justify the significant investment in the new capacity when the current resources are not being utilized, and how will this new plant specifically address the existing underutilization or contribute to your profitability?
Right. So last year we launched a new product, Ather, which is our family scooter, and that has like last year basically became a very pivotal year on the back of that. To give you some numbers for context, our plant capacity is about 35,000 units per month. October 23, we sold 10,000 units. October 24, and this is data out of the government Vahan portal, so you can check. October 24, we went from 10,000 to 21,000 units out of a capacity of 35. So, and this is literally just within a few months of starting sales of a new product. The new family scooters landed really well across the country, but particularly in the non-South markets, where historically we've actually had limited distribution in the past. We've seen our market shares go from, like in Gujarat, for example, we've gone from 5% to almost 25% market share. Maharashtra, MP, we have seen like sudden surge in volumes in all these markets, which is what's also making us bullish about adding new distribution and new stores in these geographies. As that happens and we can extend the success of these new products in more markets, we're feeling very bullish about volumes and continued increase in capacity utilization. On 21 out of 35, you can already see we are at, we've increased in utilization quite a lot. Secondly, we are getting ready to launch our lower cost scooter platform called the EL scooter platform. This is optimized for cost, and this allows us to then hence build even more aggressively priced products. As that comes live, we obviously expect our volumes to trend even better. And you put these things together, which is why we are starting to invest in new capacity. In automotive, a greenfield facility will take a fair bit of time, and which is why out of the IPO process, we have planned this investment.
Hi, Mr. Mehta. This is Shreyansi as well joining in the conversation. I wanted to check with you about the company not being eligible for PLI benefits. How does that really, the lack of access, in fact, to this government incentive, how does that impact your manufacturing strategy, cost structure, competitive position as well, especially compared to competitors who may be receiving such benefits at this point in time?
Not having PLI, we worked with it for a few years. There are a few years left in the PLI now. We now see this as some sort of a effective incentive for our business to push and create additional sources of margin, revenue, and profitability. So, for example, over the last few years, we took the software that we were building on our product, and we were able to monetize it completely separately. This has allowed us to expand our top line and particularly expand our margins quite significantly, because this is a 53% EBITDA margin product. And this is a little bit of a unique Ather strength to the kind of margins we've been able to grow our software. We've also been able to keep our pricing in the more mass premium space. So we've been very disciplined with that. Ultimately, as a long-term buyer of, if you're looking at Ather from a long-term perspective, what I think should give you a lot of comfort is that Ather's pricing is truly independent. Ather's pricing and margins both are truly independent of government subsidies like PLI, which makes in some sense our P&L actually quite bulletproof. So we actually feel pretty comfortable with the idea that our pricing and our business models not dependent on things like production linked incentives.
All right, thank you so much, Tarun, for joining us today. Now, remember, Ather Energy's IPO closes today. It is the last day to subscribe, and this is an IPO that's worth 2,626 crores. And in fresh issue, and the offer for sale is going to be for around 354 crore rupees on the upper cap. So, the last day to subscribe to Ather Energy's IPO. But
if you like this video, then like, share, and subscribe to ET Now.